Good evening. Wanted to make a quick video to look at Apple stock. And this, of course, is for the YouTube channel Income Trading 101. This is Eric. Typically, I'll have my face in these videos, but I just wanted to record a quick one this evening before heading to bed and to just get some content out there. So, looking at a stock chart of Apple right now, a pretty popular stock. Closed today at $240.51. Clearly has been on an uptrend for quite a while. The question to ask yourself is, do we expect a pullback? Is it going to continue? And that sort of thing. So let's take a look at the. Let's see the next. The next slide shows some of the moving averages. So I like to stick to the 10, the 20, and the 50-day moving average. Now you can get all sorts of creative, 56-day, 200-day is pretty popular. The 100-day. I tend to look for, especially in a stock like this that's been on the uprise. I want to have more of a kind of a short-term view. And then if that is validated, then I stick with it. But if the market starts to pull back, then I'll definitely take a look at a longer term moving average just to get a better sense of where we've been and where we might be going. So you can see along the way I should have made the colors a little more distinct, but this one here, this line here closest to it is the 10-day moving average. You always expect that to stick pretty closely to the actual prices. The next one here is going to be our 20-day and then the 50-day. 20-day is essentially 1 month, 10-day is a 2 week, so 2 week, 1 month, and then a bit longer, more like a 10-week moving average. So and looking at this, all three averages are in line. So the 10-day is higher than the 20-day, which is higher than the 50-day. That's a clear indication that has been a bullish trend. So no real significant news there. It is as we expected it to be. Looking at a Fibonacci analysis, once again, is not going to help us that much. If you look on this last big move, where we went from $233 down to essentially $142. That was a pretty significant move that we saw last year. This also happened to be when the U.S. announced it, or first made it clear that we were in a trade war with China. So we had that drop, but you see the recovery was a 78.6. Isn't it funny, or would you say ironic, that it actually met up with one of the Fibonacci numbers? Something to think about. And then from there, it pulled back. The stock pulled back, but look at where we are now. We have fully recovered that loss, that move that we had from last November. So that means we are charting in new territory. So this Fibonacci analysis didn't give us a whole lot to work with. So let's look at another. So this is a 5-year. Now it's important to look at a 5-year chart simply because you want to know where this stock has been just to get a better sense of where it might be going. Again, we've been in such a strong uptrend with Apple stock that the 5-year really doesn't give us that much additional information, but it's always good to check that in your own technical analysis for your portfolio. I always love the MACD line. The MACD can be great for looking at reversal patterns. The problem is when you have a stock that's been going up for the last 2 months, almost 3 months, sorry about that, it really doesn't give you all that much useful data. So a lot of times you're looking for these crosses to happen, like here back in June, early June, when you had the slow line cross over. The fast line crossed over the slow line here, and it was below the zero line, which is a strong bullish indication. And sure enough, the market did go higher. But you can see in this more recent bullish pattern. We're getting crossovers and whatnot, but it really isn't indicative of anything just yet. So the MACD didn't give me that much information. I do like looking at trending lines, and what's so interesting about this trend up is that initially, creating a channel for these last few months, this move that we've had since August really sits well. But what's interesting is that the top of the channel actually would have been the support for the June and July market pattern. So very interesting. Definitely, if this breaks above the pattern, you'll expect it to go much higher, quicker. If it stays within the channel, then we have a nice little forecast of where this stock might go. And there's any number of trades that you can use. I'm mostly an option trading guy, so when I see channeling markets, I think of all sorts of things like strangles, straddles, iron condors, all sorts of stuff. And to wrap it up, I wanted to give one more quick look at some support and resistance. So I used this most recent high move, the one prior to where we are now, back from September of 2018. And if you look, the top of that move actually seems to be creating a little bit of support right now. So oftentimes resistance in one part or during one period will turn into support in the other. And we see that pretty solid support from this purple line here. So it played support back in November of 18 for a little bit, for several weeks actually. It was more like October than November. But then in May, it ended up being resistance. In August, early August, it was resistance. And then it seemed to create a little bit of support. And the final one that I wanted to look at was down here in this 170 region. You see some pretty solid, support for the market here. So what we'll end up doing is carrying these lines out into the future as the stock continues to make moves, just so that we're aware, because we know that support can become resistance. Resistance can end up becoming support for the next big move. So it's good to have an idea of what price levels have been a challenge in the past, because they have a way of popping up again in the future. And I believe that is it for this evening. Thank you so much for watching. There'll be a new video tomorrow. Take care.